Hi everyone, welcome back to Beric's podcast. So in this session, we are going to discuss about an article which I came across in the Economic Times newspaper. It's an RBI data about the foreign direct investment. The article says that it has been decreasing and it is lowest since 2007. So why is that FDI inflows is decreasing? Is it due to the change in the government? Because now a coalition government is there in India. So why is that FDI inflows has decreased in India?
Well, we must first understand investment in India. For us, we are Indians. So we look at it as only India, nothing but India. But when you look at it from the foreign investor, India is one other place they invest in. So if you're let's say, an investor sitting in the US, Indian market is one market which you're investing in. And so the reason why they pick India is based on a lot of factors. One is what is happening geopolitically, and two, what is happening within Indian economy, and how does that impact for every dollar they put inside, how much are they going to get back? And it's a really complicated analysis to do. And if you look at it in that analysis, there is currency fluctuation, there is economic fluctuation, plus there's global sensitivity happening. So all this has to be factored into when they put money and they take it out. It is just not because India went through an election and we have a coalition government. It is because of also the renewed US-China trade conflicts which are happening. There's a rising tariffs on Chinese import, which is creating more global tensions. Okay, EU has already implemented new regulations, and those are coming into action to safeguard their own economic security. So globally, what is happening was something which we saw with Donald Trump, where he kept saying America first, America first. That kind of feeling has spread throughout the globe. And most countries are feeling they should be protecting themselves. Even in India, we had Make in India initiative by our Prime Minister last time around, if you remember. So there's a whole bunch of factors which are globally playing. Now, let's take all this and now add the economic factors. This is just the political factors I'm talking about. Now, let's slap some economic factors into this. One is where the Fed is sitting with the interest rate. So when I look at all this economic uncertainty, and then I have my US dollar to invest, and let's say I put the money in India, and let's say the company, whatever, grows at even 12%. If I take the economic conditions and the conversion rate, might come back and I might make only, let's say, 6% after conversion and whatever is paid out. It's safer for me to keep the money in the US Fed right now, in US Treasury, because it is just offering me such secure, safe returns. That's why even Warren Buffett, though he doesn't like it, Treasury bills, is buying lots of it because they're giving free cash, safe, good returns. And if you don't have any great place to put your money, an Indian market right now is overvalued. Look at all the Anand says diamond needles, no?
Yeah.
By the OCs. There's so many in India. All the good companies which have good corporate governance, which are valuable companies, are at extraordinary high valuations. So those valuations doesn't leave you much room to invest. So then what do? You pull back. It's not that they're not putting any money. They're taking gambles in small caps. If you see our small cap, they've been dumping money in the small cap FIIs. And we do not really know who's the one dumping. That's a problem. We put all FIIs into one box and we keep it. That includes people who are, value investors from US, and it also includes people like Adani's brother sitting in the Maldives. So all of them are foreign investors. So when you see money from there coming from that basket and seeing where it goes, it's very difficult to see. And they're not only pulling back money from India, they're pulling back money from all over because they're not sure. That's why even Warren Buffett is making a move away from electric vehicles. He's been liquidating his hold in BYD, and he's looking at other avenues for investment. He's even making bets on hybrid vehicles and hydrogen vehicles. So you don't know where it is going, how they think. So though the article is making it sound like it's a reflection on RBI or our government or our economy, I would say it's a little more complicated than that. You just can't use that one metric alone as a measurement. Even towards the end of the article, he concludes why the FIIs are pulling out money. It's more complicated. But you should take solace that a lot of Indians are coming inside to take the place of the FIS. Before a long time back, FIS were moving our markets up and down. We'll say, the FIS are coming in, so they're pushing the market up, they're pulling out, so the market is falling. Now, a lot of domestic investors are also investing. So, our market demography is changing. And given time, by the time you reach my age, it will be a lot different than it is today.
Okay. Sir, in that article, they have mentioned that since 2017, services sector inflows have increased by 49% and manufacturing sector has decreased by 30%. So, why is that FIS prefer services sector?
Well, Indian economy is a service economy as of now, because what happened during our reforms from the previous government, when our economy opened up, was we were unable to reform the labor laws in India. So that is why we did a pivot, our government at the time, and our economy took a pivot and we went into services. Software industry is services industries. Software industry is not a manufacturing industry. All our big companies, TCS, Infosys, Wipro, all of them fall under services. They're not manufacturing. So Indian economy is majorly a service-based economy because our labor laws are stifling us from becoming a manufacturing hub. That is why we did not become the factory to the world. In China, they're a communist country. The government can dictate whatever rules it wants. It can hold its citizens hostages. In India, you cannot do that because we are a democracy. If you try to do that, you'll be out of power next election. So our labor laws have not reformed. So our real big companies in India are all services company. And it's there. That's where the money is right now. Because that's where the growth is right now. So they're moving to it. Indian manufacturing is still growing. All this is just news. Tata setting up iPhone and all that. But real bedrock of Indian manufacturing has to grow. We'll have to wait and watch. FIS placing bets where right now growth is. They have to put their money, invest their money where they can see growth. And right now they're seeing growth over there, so they're placing their money there.
So, one last question is, who is predominant, FIS or FDIs?
You got to realize there's the difference between FIIs and FDIs. FIIs are foreign institutional investors. Okay, they involve in purchasing securities, stocks, bonds, and other instruments, but their thing is for a quick return. They usually trade and they do the portfolio diversification, all those. Those are the guys who are moving in and out of the market frequently. Okay, and they are the ones who seek to benefit from price fluctuations. But what FIIs don't want to do is they're not involved in any controlling or influencing the company in any form in their investment. Right? The investors don't participate in management or decision making in the companies. And their impact on the economy is rapid money flowing in and flowing out. Okay? So they basically work with mutual funds, hedge funds, pension funds, and all that. And other large investment funds. Right? FDIs are foreign direct investors. They actually invest in long term. And they try to influence the management of the company, and they align their business goals and the company's business goals. They try to align all of this, and they try to influence what the company is doing. So an example would be like, your ITC, okay? British Tobacco would be like an FDI. They're influencing the company. Your Nestle, right? They're influencing the company. And the primary difference is what their idea is. So multinational corporations and subsidiaries and joint ventures, all those are FDIs. They're a foreign direct investment. So the article is talking about those guys. And if you see the IPOs which are coming, right? The Hyundai IPO, Coca-Cola's planned IPO. It is the idea of these foreign companies want to pull money out of India. They're trying to suck money out of India. And the reason is because Indian markets are overvalued. Okay. But like I said, as an investor for you, it makes no difference. If anything, it will only give you more opportunities. Let's say British American Tobacco dumps ITC hotels because they don't want it. As an Indian investor, it's an opportunity for you to buy. After the IPO of Hyundai, the parent company of Hyundai decides to dump more shares and the Indian Hyundai price crashes. It's an opportunity. You understood?
Yeah.
So as an investor, it makes no difference. So this is what I want you to understand.
Yes. So I hope that this video is informative and you had some knowledge about FDI inflows and outflows, and does it impact the Indian economy and the Indian markets. So if you like this video, please share it with your friends and subscribe to this channel for more videos. See you in another episode with an interesting topic. Thanks for watching the video.
Thank you.